taking money out of your UK limited company, dividends versus payroll, what's the difference? This is brought to you by Google's Bookkeepers. If you enjoy the video, please do subscribe, like and share. So how do you get paid? A lot of people ask this question. They are directors of UK limited companies and they want to understand how does this whole thing work. Okay, so a company pays tax on its profits. That's the first statement to make. So if you've got a company and it's made profits, it pays tax on those profits, and then after that it can pay out any dividends. Now if you as a director take money out of the company, then you as an individual pay personal tax on that money that you've withdrawn. So a company pays corporation tax, individuals pay individual people's taxes. So very important that there is a difference. So whether the company is paying the tax or you, the individual, is paying the tax, someone's paying the tax. Now, as at the year to the 5th of April 2021, the personal free allowance every man, woman and dog can earn in the UK is £12,500, and that's your tax-free allowance. So everyone is entitled to earn that without paying any tax at all. There is also what's called the dividend allowance, because if you take out dividends, there's a thing called dividend tax, and that is £2,000. So there's lots of different kinds of taxes. There's corporation tax, what companies paid. There's personal tax, individuals pay. There's dividend tax, people pay. Different types of taxes. So let me give you just an example here. So at the moment, companies, the company tax rate, main rate of tax is 20%. Your personal allowance is 20% up to a threshold, then it's 40%. But for dividends, the following tax rates and tax thresholds apply after the personal allowance of 12,500 is used. So your basic rate of dividend tax rate is 7.5% on the amount of dividends from £2,000 to £37,500, and then there's a higher rate of dividend tax rate of 32.5% on dividends earned from £37,501 to £150,000. And then there's what's called the additional rate, which is the dividend tax rate, 38.1% of dividends earned over £150,000. So that's the first thing to get your head around. Whereas tax-free, after your 12.5, then it's 20%. So from that you can see why people would be more keen to get paid in dividends. But we're going to do a worked example, don't worry. So many company directors therefore use the strategy of having a payroll and taking the minimum salary of 8,788. Why is it 8,788 and not 12,500? That's because there's also a thing called national insurance that we have to pay on earned income. So although you start paying tax after 12,500, you start paying national insurance contributions after this 8,000 figure. So some people out there don't even want to pay national insurance contributions, so they'll take out the minimum in payroll and then they'll take out the rest in dividends. Now I'm not saying it's right, wrong, good, bad. I'm just trying to explain to you what the difference is so that you're not in a state of confusion. So let's look through a worked example. That's the best way to understand something. So let's imagine we've got a company director who's taken out 58,788. Okay. So they took their first bit of this money, 8,788 as a salary. So that falls within their personal free allowance because it's within the 12,500. So tax to pay, there's none. The next 3,712, so this would bring it up to 12,500, they're taking as dividends. You're still within your tax-free personal allowance. There's no tax to pay. The next 2,000, because remember the first 2,000 above the personal tax allowance is tax-free. So the first £2,000 of dividends above 12,500 is tax free. So they use that in the dividend allowance. Then, because the threshold, if we remember back to this threshold, remember it goes from up to 37.5, it's 32.5%. So their next tranche of money, bringing it up to 37,500, still within dividends, is charged at the basic rate of dividend tax of 7.5%. So they pay this £2,662.50 in tax, dividend tax. And then the last little bit above that 37.5 threshold, they're paying at the higher rate of dividend tax, which is 32.5%. So the total income tax to pay is £5,518.60 on a I'm not going to say, on a salary of 8,788, but with a total income of 58,788, because they took salary and then the minimum salary, if you like, and then the rest as dividends. So just remember that number, 5518.60. Okay, now let's compare that to if we were on the payroll and we as a director took the whole lot out on the payroll. So let's say if we ran a payroll 58,788, what would happen? So you have your 12,500 of tax-free allowance, so that you would pay tax on the difference of 46,288. Now the basic rate of tax is 20%, and you pay that on the first 37,500. So 20% on that would be 7,500, and then you pay 40% as a upper rate taxpayer, a higher rate taxpayer. You pay that on the rest. So 12.5 to 37.5, that comes to 50. Anything above £50,000 earned is taxed at 40%. So the amount above the 50,000 is 8,788. So 40% tax on that is 3,515.20. In addition, there's national insurance, roughly 12%, and that's paid after the threshold of roughly 9,500. So you're going to pay national insurance on the balance. Anything above 9,500, you get 5,914.40. And then because it's over 50,000, there's an additional 2% on the amount above the 8,000, or above the 50,000, which would be 8,788, making total tax and national insurance contributions to come to £17,105.40. That's when you pay yourself on the payroll. So this was why, for those wondering, this could be another question, why has there been such a hoo-ha regarding the Chancellor not paying directors? And people were saying, we've paid our taxes. Yeah, you've paid your taxes, you paid your dividend tax, that's fine. But earned income was what they calculated on the furlough. So dividends is almost like investment income, if you like, almost. But earned income, when you're actually on the payroll, where you pay more tax and you actually pay national insurance, because you don't pay national insurance on dividends. So if we think about this, if you're on an income of £58,788, those who are on the payroll, they paid their tax and national insurance of £17,105.40. And I always say to people, don't feel bad about paying tax. It means you've made some money. And don't feel bad about paying national insurance either, because national insurance goes towards funding the NHS and libraries and hospitals, police, the fire department, keeping the lights on, collecting your rubbish or whatever, and also for pensions and stuff. So it goes towards the social benefits that we rely upon and come to expect in society. We've got to pay into a system. We can't just be taken out of it. So if you want to get a pension, and when you're, I don't know what the pension age is now, 70, you have to have paid your national insurance. You have to have contributed in order to take out. So compare that to those on dividends who paid a dividend tax of £5,518.60, and you can see, with a difference of over 11,000, why the Chancellor only counted those on payroll, and this is income, and those who were on dividends, like that didn't count as being part of your furlough. So what the scheme was is that you was able to get up to 80% of your salary, and that's fine. If you've paid yourself a salary of roughly 8,000, you can get up to 80% of that 8,000, but not of the 58,000, because you're not entitled to it. And this is what the argument was, or is, because some people are still saying, oh, you know, the directors have been left out. And not all directors do this. Some directors just are on pure salary, some are on the minimum salary and the rest dividend, and others are just anywhere in between those two positions. So you know, everyone's circumstances are different. It's up to you how you manage that. As always, you know, I just try and explain things on the channel. Do speak to an accountant for, you know, advice on your own personal situation and what might be best for you. Any other questions, anything else you'd like me to answer, please send your questions in to admin@booglesltd.com. And this was brought to you by Boogles the Bookkeepers. If you've enjoyed it, please subscribe, like and share the channel.